All right, let's get right into it. Today, we're looking at a crypto market that seems, well, almost too quiet on the surface. But just underneath, there's a massive event brewing. It's December 26th, 2025, and trust me, things are about to get very interesting.
So if you're looking at the charts, you might be wondering, has the market just gone to sleep for the holidays? Why is everything hibernating? And more importantly, is it actually sleeping, or is it just holding its breath?
First things first. Before we get to the main event, we really need to understand the landscape we're in right now. And that is, without a doubt, a deceptively quiet end-of-year market.
Now, you'll hear these terms thrown around a lot. When we say the market is sideways, it's exactly what it sounds like. Prices aren't really making big moves up or down. They're just kind of stuck. And thin liquidity? Well, that's just a fancy way of saying a lot of people are on holiday, so there are fewer buyers and sellers out there. This is super important because it means the market can be pushed around much more easily.
Okay, let's put some hard numbers on this. Bitcoin is just sort of hovering around $87,500. It has been absolutely trapped in this $5,000 range between $85K and $90K for what feels like all of December. And if you zoom out to the year-to-date performance, well, oof. Bitcoin is down 7%, and Ethereum has had an even tougher time, down 15%. Not exactly the year-end rally many were hoping for.
But all that quiet market action is really just the backdrop for the real story today. Because behind the scenes, a truly record-breaking event is about to go down.
$27 billion. Just let that number sink in for a second. This isn't the market cap of some new altcoin. This is the staggering value of crypto options that are all set to expire today. And to be clear, this is, by a huge margin, the largest options expiry event in the entire history of crypto.
So where is all this financial gravity concentrated? As you can see, it is overwhelmingly a Bitcoin story. The lion's share, about $23.5 billion, is all tied to Bitcoin's price. Ethereum makes up the other $3.5 billion. But this is why. Right now, all eyes are on BTC.
So how can this trigger fireworks? Well, it all comes down to a wild-sounding concept called a gamma flush. Put simply, the big market makers who sold all these options have positions set up to hedge their risk. But when all these options expire at once, they have to unwind or get rid of those hedges, and they have to do it fast. This can act like taking the brakes off the market, potentially unleashing a huge wave of volatility that was being suppressed before. This potential for a massive move creates a huge tug of war. The market could swing violently in either direction. So let's break down the arguments for both the bulls and the bears, because they both have a strong case.
Okay, so on one side, you've got some serious headwinds pushing down. Money has been flowing out of crypto ETFs for days now. Market sentiment is literally at extreme fear, and altcoins are just looking weak. But on the other side, the bulls are looking at this very same event as the catalyst that could finally break Bitcoin free, and they're pointing to the big institutions who are still quietly buying in the background.
And to really hammer home that negative sentiment, take a look at this. In a year where Bitcoin is down 7%, the classic safe haven asset gold is up a mind-boggling 70%. This has definitely pulled some attention and a whole lot of capital away from the crypto world in 2025.
But here's where the story gets really interesting. While retail traders are feeling the fear, some of the biggest players are doing the exact opposite. We're seeing major companies like Metaplanet in Japan using this quiet period to accumulate even more Bitcoin. It's a massive signal of long-term confidence, completely tuning out the short-term noise.
Okay, so we've looked at the quiet market, the historic event, and the powerful forces pulling in opposite directions. So what on earth does all of this mean for you? Let's connect the dots. Honestly, your perspective here really depends on your time horizon. If you're a long-term holder, you might be looking at all this fear as a potential buying opportunity, focusing on those big forecasts for 2027 and beyond. But if you're a short-term trader, that dangerous combo of low liquidity and a potential gamma flush makes this an incredibly high-risk environment. Seriously, caution is the name of the game right now.
So, what should you be watching? Here are 3 crucial signals. First, the immediate price action right after the expiry happens. Second, watch those ETF fund flows early next week. Does the money start pouring back in? And finally, the big one. A decisive, powerful break below that $85,000 support level or a blast through the $90,000 resistance. That's what's going to tell us who won this tug of war.
As we wrap all this up, we are left with one big, lingering question. It's a question that's hanging over the entire market as we head into the final days of the year. So, is this $27 billion event going to be the firework that sends crypto soaring into the new year? Or is it going to be the one that signals there's more pain ahead? The stage is set, and the show is, quite literally, about to begin.
And of course, just a friendly reminder, none of this is financial advice. The crypto market is incredibly volatile and unpredictable, so please always do your own research. Thanks so much for joining us for this deep dive, and we'll see you next time.